Trading activity is underway here at the New York Stock Exchange. Stocks are higher, and so are your most actively traded. Ford opening the door to Carlos Ghosn from Nissan, talking to them if he wants to leave General Motors, and you can see Ford shares leading to the upside. National Semi higher despite cutting its forecast at the chip maker. Chip stocks are higher across the board, and at the Nasdaq gaining ground as well. Most actively traded individual, chip maker Intel, up 10 cents on the day. Now, want to talk a little bit about the consumer. Jack Ablin from Hayes for watching. I'm Erin Burnett. I'll see you back here tomorrow at 9 a.m. Eastern. I'll see you this afternoon on Street Signs at 2 o'clock. And right now, it is time for Morning Call. Morning and welcome to Morning Call. I'm Erin Burnett, right here again at the New York Stock Exchange.
And I'm Liz Clayman at Cnbc World Headquarters. We're going to start you off with the National Association of Realtors. They are due out right now with the report on existing home sales for July. Forecasts call for a modest decline in sales. CNBC's Diana Olick is outside NAR headquarters in Washington with the numbers. Diana, was modest the number? The right word to use, I guess?
No, actually not, Liz.
Really?
The forecast was all wrong. Existing home sales fell much more sharply than expected, down 4.1% to 6.33 million units. That is the lowest since January of 2004, and it's down 11.2% over July of 2005. Now, the median home price was up just barely at 0.9% to $230,000. The big story here, inventories up 3.2% to a 7.3-month supply. That is the sharpest increase of inventories ever and the highest inventories since April of 1993. Let's go locally and see what's happening. In the Northeast, sales down 5.4%. In the Midwest, down 5.9%. In the South, down 1.2%. And in the West, 6.4%. A surprising little bump up, though, in condo sales, up 2.8%. That could be, though, that condo prices have been adjusting faster than single-family prices. Single-family home sales down 5%. This is the fourth consecutive drop in sales, and as David Luray, chief economist for the National Association of Realtors, says, it is much lower than we anticipated. He says now the housing sector is fragile. He is blaming it on sluggish economies locally and nationally. He's urging the Fed to watch interest rates. Some more numbers for you. Prices were down in 26 metro areas, and prices were actually down 2.1% in the Northeast and down 0.3% in the West. This is the first time we're really beginning to see the negative pricing. We've been talking about pricing holding stable, even just a little bit up, because prices always lag behind sales. Well, guess what, Liz? Prices are finally catching up. Back to you.
Boy, that inventory number does make you sit up and take notice, doesn't it, Diana? Where, if you could once again go over the areas that you see where this is a real issue with inventories and then also just the sales themselves.
Well, they don't break down the inventory numbers by region, but the areas where you see the sharpest decreases in sales are in the Northeast and in the Midwest, also 5.4%, 5.9%, and of course, the biggest drop in the West at 6.4% because of what we've always said, the hotter the market, the harder it will fall.
Sure,
in the West,
sure.
Of course, bumped up way up in the boom, and so it's coming down a little bit harder. So far, though, we have only seen price drops of 0.3% in the West, so they're still looking for that price, stabilization, for prices to come down enough back to normal, because we were seeing a price appreciation last year at this time in the double digits. Finally, it's almost coming down to that zero level. Average price appreciation on a home in normal times would be about 6%. Realtors are looking for that later this year. They're also possibly looking for a bump in sales next month or the month after as those prices continue to come down and people get off the sidelines and start buying again.
Well, I guess we can now say that last year and the year before were the good old days, can't we? Thank you very much.
That's the understatement.
Diana Olick. Let's take a look at how the home builders are faring this morning with that news. Everybody's down, but not too dramatically here. We've got Toll, D.R. Horton, KB Homes pulling back by $1.71, but Lennar is down fractionally. Same with Pulte Homes, Aaron.
All right, Liz. Well, just taking a look at the market reaction as those numbers crossed. The Dow had been up more than 20, went down to a gain of only 8. We're now up to 16. So certainly off of the highs, although rebounding a bit from when those headlines initially crossed. The real weakness on the back of the home sales data did come on the Treasury side, seeing weakening there. As for the Nasdaq, still up about 6 points. The S&P 500 up 1.5 points, Liz.
Bob Pisani's walking around on the floor of the New York Stock Exchange checking out today's action. Bob, I just noticed, J.P. Morgan cutting KB Homes to underweight from neutral. Clearly, that might be why it was getting hit harder than the others. But is this a topic of discussion right now? As existing home sales came in pretty significantly lower?
No, the inventory levels, we have known for a long time that the inventory levels have been startlingly high. We interestingly saw home builders notably weak even prior to this number. They were weak right from the outset, Liz, many of them down 2, 3, and 4%. What's important here is that overall the market did not move that much on these particular numbers. 7 or 8 points on the Dow is not a statistically significant move. Here's what's really going on. The important thing is that we really haven't done that much in the way of damage so far in the month of August. As a matter of fact, we are just 2% from the highs that we hit in May, and that's the thing that traders are concentrating on. Despite the concerns about a slowdown in the economy, the stock market itself has held up very well. Let's talk about a couple of sectors here. Take a look at some of the semiconductors. I think it is notable that despite the comments from National Semiconductor this morning, semiconductors are generally to the upside. Here's what's important. National Semiconductor, one of the big semiconductor manufacturers, cut their revenue guidance after the bell yesterday. Normally, that is not good news. Of course, that's the top line. Less sales coming in, but they kept their gross margins intact. Now, what does that mean? Well, it means simply that their sales are down, but they are not losing profitability on what they are selling. That's a very important metric. National Semi is up here. Texas Instruments, which competes against it in the wireless chip space, slightly to the downside here. Other stocks that are around that are in other spaces like Broadcom and Advanced Micro are to the upside. The important thing here is that semiconductor stocks had a horrible few months from March to July. Many of them, like Broadcom and AMD, for example, were down 50% from March to July, but they have all of them come off of their lows since the middle of July and are up notably in that particular time period. Retailers also have had a lot of problems from May to July, many of them down 20 to 30% as there was a perception that the consumer would be slowing down. All of the retailers just sold off en masse in a knee-jerk reaction. They too bottomed in July, mostly coming off their lows. Borders down noticeably here today. They reported a loss compared with a profit a year ago, and they blamed the problems they are having on heavy costs for remodeling stores. Obviously, some slower sales are a big issue there. They guided to a loss for the current quarter as well. Payless Shoe Store down there, also down heavily. They came in earnings a bit lighter than expected, but Aaron, Payless, which is the largest shoe retailer in the country, has held up much better than all of the other retailers because primarily it deals with shoes at the lower priced end of the spectrum. That stock was just at a new high last week. Aaron?
All right, Bob Pisani. And Bob, giving you the market side of things and the stock side, let's take a look at treasuries. I told you that right after